Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be showing you some very powerful charts which tell us that the bull market may well end in the next 3 months. And these charts look quite accurate. And of course, there are many other charts which show a completely different picture. If you've been watching a lot of YouTube videos from other channels as well, the opinion seems to vary from having a massive crash in October to 300,000-400,000 in the next few months, as well as people thinking it's going to be an elongated cycle. And to be perfectly honest, nobody has a crystal ball, and everyone looks at the same charts with the prism of a completely different set of rules. So everybody comes up with a unique set of conclusions. It's really up to you to weigh everything up, to do your wider research before you make any big decisions. Because the truth of the matter is, no YouTuber has the right answer, and every one of them could be possibly accurate and correct. The main thing is to try and do your wider research, listen to a lot of other people, weigh up all the differences, and then come to your own conclusions before you make any investment decisions, so that you can take responsibility for your own actions. And that is the reason why I always give a polite reminder, which is that please remember, everything in this video and all my videos is really for educational purposes only, and nothing should be taken as financial advice. The simple truth of the matter is, I'm not anybody's financial advisor, and I wouldn't want to be. All I can do is to present what I see in the charts. So with that disclaimer out of the way, remember it's Sunday, it's time to put everything to the side, get your Snickers bars, get your cups of teas, eyes on the screen, and let's get cracking. And as you can see, we're starting off with the hash ribbons here, because in the last video, we were all waiting for the hash ribbon signal here to maintain its record of being accurate in terms of the price never going below the hash ribbon signal. And that was at around about the $44,000 mark. So the question is, did we maintain that record? If we zoom in here, so this was the buy signal. Remember, this is the weekly chart. We closed this signal on this candle here, and I've marked it with a green ray there to give us a price. And the main thing is that, did we close below this signal? Last week, this is what happened. We actually closed around about $700 below the actual signal here. In the bigger realm of things, that's not too bad, considering that we had this wick down here and we had gone right down to 39,500 here. So during the week, we went all the way down to 39.5, and the bulls tried to push it above this neckline here at 43,800, and we just failed to do it by around about $700. And to be honest with you, if you look at the bigger picture, $700 is really quite minute, and I really don't want to fall out with the hash ribbons. They've proved very successful for me over the last few years, and no doubt they'll be very successful in the next few years. So I think we should maintain our friendship with the hash ribbons and not fall out with it, because we may need them again in the future. Moving on to the 21 weekly exponential moving average, which is one of the other ones that we saw last week. And I said that if we close below this, that would be quite bearish. And I said that we need the next week's candle to push us above this 21 weekly exponential moving average, which was at the time around about 43.5. So we've got exactly that. So the bulls have come in and they've basically negated this candle by pushing us all the way back towards the 48,000. And this is a really bullish sign for what's to come in the next few months. But certainly this would have shaken a lot of people out of the market, which is what the market is sometimes designed to do. Okay, I'm going to move on to the most important section of this video, so please take a note very carefully here. This is the BLX chart on the monthly time frame, and I've marked up 3 candles in each of these bubbles throughout the 11-year history of Bitcoin, starting from 2010 to the current period here. You're probably asking, what are these 3 months candles? Let me put on the log growth curve and everything will become abundantly clear. If we zoom in on this one at the beginning at 2010, you can see the 3 candles are October, November and December. We can see quite clearly that the October one came to the bottom of these Fibonacci retracement log growth curves that we've got here. Similarly, in 2011, once again, we were at the bottom of the log growth curves. 2012, once again, we were at the bottom of the log growth curves. In 2013, this time we were at the top of the log growth curves in October, November, and December. In 2014, this was the first time in its entire history that we were neither at the top or at the bottom. 2015, once again, we were at the bottom of the log growth curves. 2016, at the bottom of the log growth curves. 2017, this time at the top with these three candles. 2018, once again, we've gone back down to the bottom. 2019, back to the bottom. 2020, again, at the bottom of the log growth curve. The question now is, we've just closed September. We have 3 months to go. Are we going to be going to the bottom here, or are we going to go to the top here? That is the $64,000 question. If we zoom out, there is actually a clue as to what may happen here. And I need to take you back to the first cycle. So this is the first cycle from its inception in 2010 to the end of 2013, marks the first cycle here. Then between 2013 at the end of 2017, we've got the second cycle. So this is the first cycle, this is the second cycle, and this is the third cycle. The clue is in what's happened in the first cycle here. In the first cycle, there were 2 peaks. So in this first cycle, if you look at this candle here, we peaked in April 2013, and we bottomed on this candle here in July 2013. So make a note of that. April 2013, July 2013. And guess what's happened here? Take a note here. We peaked in April and bottomed out in July this year. If we color the middle of the log growth curve with this orange line here, just to show quite clearly where we are, the September candle in this first cycle was just below the orange line, below the 50%, before the October candle went above it. And the last September close was here, just below the orange line. So there's a lot of resemblance between the first cycle and the second cycle. Here we had 2 peaks, the first one being here in April 2013, and we've got one here currently in this cycle in April 2021. So the question is, what happened here? And as you can see, in October, November, and December, we topped out in the first cycle. When you were at this candle below the 50%, nobody saw this coming. The October, November, and December candles took everyone by surprise here. Because if you look at the September candle, it's well below the 50%, and within 3 months we went to the top of the log growth curve. If we look closely here, it doesn't look as though we're going to be going up to that level too soon. And the main question we have to ask is, will we repeat the cycle of the 2013 in the next 3 months? And will we top out in November or December this year? I thought this chart was absolutely fascinating. If we take this bubble out and have a look, this is the current October candle. And we've already just pushed our way above the previous high of the last month. The question is, can we get to the 50% Fibonacci level here, which is at around about 54,000, 55,000, and then make our way towards the top? Leave me your comments below to see what you think of this. Whether you think that this is going to play out like the first cycle and that we're going to have a massive candle. Certainly there's a very good chance that we have 3 massive candles in the next 3 months that take us to the top. And as we've seen in the last 10 years, the last 3 months of the year, at least one of the 3 candles, October, November or December, hits the top of the log growth or the bottom. Leave me your comments where you think this is going to be going. Are we aiming for the top or the bottom? My own view is, with the benefit of other charts that are showing similar things, that we're more likely to go to the top rather than the bottom. Only time will tell. It's for everybody to make up their own mind where it's going to go. But certainly I wanted to bring this to your attention. And what do you think? Are we coming to the end of this bull market in the next few months, like the first cycle? If we do end the cycle at the top, what's the possible prices that we could get to over here? For that, we can use the Fibonacci extension tool. We can work out what price we're going to be getting at the top of this cycle by using the Fibonacci extension tool and taking it from the first cycle here at the bottom to the penultimate top of that cycle, i.e. the one before the actual top, which is here, and the bottom after that, which is here. If we zoom out on here, we can see quite clearly that in the first cycle, we came up to the 4.236 level here, which is the next one up from the 3.61.8 here. So keep this in mind. We've topped out between 3.618 and 4.236 in the first cycle. If we go to the second cycle and did the same here, this was our top in December 2017. And if we take the Fibonacci retracement from the bottom of this second cycle, which was here, and take it to the penultimate top before this one here, this point, and then to the bottom of this correction, we can see that we topped out this time at the 3.618 here. So the first cycle was at the 4.236. The second cycle was at 3.618. So what can we expect for the third cycle? So this is the third cycle we're in now, 2017 December to the current price levels here. The bottom of that market was here, back in December 2018 when we reached around $3,000. So if we take the Fibonacci extension from here at the bottom to the penultimate top, we're assuming this is the penultimate top before we go to the blow off top here, and to the bottom where we've just been at 28,800. This is what we can expect. There are 3 levels really to look out for here. So the first cycle was here at this level, so we could get $293,000 at this point. The second cycle was at the 3.618, so we could get 254,000, which is at this point here. Or if we're moving down these Fibonacci extension lines, we could get 2.618, which is at 192,000 down here. So only time will tell, but certainly with a high degree of probability, if we do top out in the next 3 months, which is quite probable, these are the levels I'd be looking out for. And the question is, how will we know? And this is where our exit indicators come. And I've shown you these exit indicators many times in the past. And the way to judge the top is when those exit indicators are all showing the same thing, that we'll know that whether the top is going to be here, here, or here. So we're going to move on to the next main section of this video, which is very, very important. So please listen to this very, very carefully. We'll have a look at the exit indicators. I've been showing you these same indicators for the last year or so now, and I'm sure other people are showing other indicators, and you all have to make up your own mind which ones to follow and to use everybody's information and weigh them up and then make your own decision as to which ones you want to follow. The first exit indicator is the pi cycle. The red line is the 111 daily moving average, and the green one is the 350 daily moving average. Whenever the red line crosses the green line, we tend to have a cycle top, which we had here at 64,000. And if we go back in history, we'll notice that this has happened several times. This was the 2017 bull market blow-off top, the cycle top was exactly when the two lines crossed here. And the previous cycle, this is the first cycle where we had two cycle tops, here and here. And once again, it was at the cross of the two lines here. Even if we go back to the first one, the first peak here, if you look at the trajectory of this line, it's crossing at exactly the same point as this peak here. So this looks quite reliable. Currently, as we can see, the two lines are far apart. And for these two to close, this is, remember, on the daily chart. So if the price starts moving very, very quickly, these lines will start to converge very quickly as well. But certainly the price would need to move in a real parabolic phase for it to do that. So at the moment, we're obviously nowhere near that. So we need to keep our eye on these two lines so that we can get out before the lines cross. The second exit indicator that we've got is our Bitcoin investor tool. And as we can see, that whenever we have a blow-off top at the end of a bull market, we always protrude the red line here. So if we go back, this was our second cycle top. The first cycle top was here. Again, well above the red line there. So we only have two data points there. And the question is, this is currently where we're at. And we only have two previous data points to go by. And we need to be above the red line here for a blow-off top, according to the previous two cycles. And currently, this level is at 112,000. So certainly, if we do have a blow-off top, as the price is moving up here steadily and sharply, this line will start moving up and will push the red line much further up. And if the blow-off top is above the red line, we could end up around here, anywhere between $200,000 or $300,000. But as we can see, certainly we're nowhere near there at the moment. We'll have to navigate our way through these lines first before a blow-off top can take place. Our third exit indicator is the 1458 daily moving average, which is this green line here. And my method of working this out is that if you look at the previous cycle, this was our top in December 2017. And this was our previous top in December 2013. Now, if we draw a horizontal line at the peak of this first cycle, the 1458 crosses the horizontal line here, which gives us the peak of the next cycle top, which was here in December. And if we go back in history with a continuation of this, we can see that because of this sharp rise, we could take this line down here. And the previous top to this first cycle was here, back in 2011. And where this crosses around here is where we had the top of the first cycle. So if we bring this to the current cycle, this horizontal line is drawn from the previous peak in December 2017. And as we can see, the green line hasn't yet crossed that. And because this is a slow moving average, it's a 1458 day moving average. It will take time to get to this level unless we have a blow off top very quickly here, and this will then just shoot off and cross this line. And where this crosses here will give us our blow off top. And if that actually coincides with the Pi cycle, as well as the Bitcoin investor tool, then we have a confluence of three factors. However, there are other exit indicators that we'll be using. Obviously, it would make sense to use the log growth curve as well as an exit indicator, because if we look at the previous cycle, the blow off top was at the top of the Fibonacci retracement levels on the log growth curve here. And if we go previous cycle, that top was also at the top of the log growth curve here. And if we go further back, the previous peak was here, 2011. So it would make sense that when we do have the blow off top, that we'll reach at least this level here. And if that's in December, at the end of December, then this price would be around about $145,000. That's not to say that it can peak much higher, because this cycle could be quite different, or it may just fall short of that. Only time will tell, but it's a good guide. We're obviously nowhere near the peak at the moment, and the peak will only be when we come to the top of this line here. And if we have a huge October, November, and December, it may well be that we peak around the $145,000, $150,000 mark. Our next indicator is the beam indicator, and that is split into three zones, which is the red zone, the black zone, and the green zone. Basically, in the green zone is where you buy, and the red zone is where you sell. But also, it tells you where the peak is. So our peak won't come until we're in the red zone here. And currently, we're only halfway there. So we'll know that we're at the peak when we protrude into the red zone. And at the moment, it's obviously not doing that. Our final exit indicator is the RSI. And if we look on the monthly chart, we can see quite clearly that when we came to the first peak of the end of the first cycle here, we peaked above the 92 level on two occasions, this peak and that peak. And in December 2017, we peaked again above the 92 level here, and we had two peaks again here. Currently, we have only one peak. And because there is a resemblance of the current cycle to the first cycle, if we have a look at where the RSI is currently here, to the first cycle where it was around here at the same time, around very, very close to that, it may well be that we're going to be pushing up to make a second cycle top here above the 92 on the RSI. And if we did get a big few candles in October, November, and December, it may well push the RSI above there. But certainly, the RSI is nowhere near the top, around the 92 level. But if we monitor this and look at this in the next few months, if it's coming above this peak here, and the other exit indicators that I've shown you, if they're all coming together at the same time, then we know with a high degree of probability that the market is topping out, and that would be our signal to exit the market. Another clue would be that if we look at this Wall Street cheat sheet here, this really shows you the psychology of a market cycle. You can see quite clearly that the chart pattern follows very similar to the blow-off tops what we have in each of the markets, whether it be the stock market, the crypto market, or the money markets. I believe we're at this phase here, where people are now believing that we could be coming to a cycle top in the next 3 to 6 months. I believe we could be anywhere around here. And if we start seeing on the media people talking about Bitcoin, people telling their friends and colleagues and their families to get into Bitcoin, if we see people, the general retail market showing a lot of interest in Bitcoin, then that is where we will be around here, where everybody's having a thrill. Everybody becomes a genius here at this point, where the market is doubling and trebling in a short space of time. Everybody becomes an absolute investor genius. But what they don't realize is that the market is about to blow off. And they're going to be following this pattern all the way down, where most people will lose their money, unfortunately. So we need to avoid that. But certainly keep your eyes on the media. If they start talking about Bitcoin and the altcoins and all the cryptocurrencies in the next few weeks and months, we know that there is a blow-off top on the horizon. I want to also show you this Dow Jones Index, which stretches back to the 1930s, so nearly 100 years ago. And I've shown you this chart many times in the past. It's important that we revisit this here because, as we can see, with these trend lines, over the last 100 years or so, we're coming to a top of the trend line here. And as a result of this, many people are predicting that we're going to crash in October. And it may well be the case, of course, because we've always got to be fluid and flexible and accept what is going to happen and then be able to respond accordingly. That's what an intelligent investor does who has emotional intelligence, which is one of the key ingredients to becoming successful in investing. So if we have a close look at exactly what's happening currently on this trend line here, this is the monthly chart, and we really are skating on ice here, as we can see, for the last few months. And if we go back to the last time it came to this trend line, we did spend several months in this zone here before we took a tumble down. So whilst it looks imminent that we're about to fall over here, it may take a few months yet, but certainly it looks ominous that we will be having a crash sometime in the space of the next few months. So let's wait and see what happens, but it's very important that we keep an eye on the Dow Jones as well, because it's quite clear that the Dow Jones is right at the top of the trend line. And finally, I want to show you the total crypto market, which includes Bitcoin, Ethereum, and all the altcoins in the crypto space. I've shown you this chart before when we were coming up to this level here, where we said that the market will more than likely get a correction, which is what's happened here. But as we can see, we're forming a double bottom, as I mentioned in the past few videos, that when we come to this, it may well be that this is what is forming to take us higher above this level. So basically we found support on this blue line here once more, as we've seen here, and if we go back here as well. So we've now got 4 touch points on this line. So is this a sign that we're about to go north from here? Only time will tell, but it's very important that we keep our eyes on the ground with some of these indicators, which are very powerful, which are very relevant and very important in giving us a clue as to what the market is about to do. Okay, so that's the end of the bigger picture view that I wanted to show you, which was very important. And if you found value in that bigger picture, then please do remember to like and subscribe if you're new. Okay, moving on to the current picture. We've been looking at this weekly chart, which has given us an idea of exactly where the levels are for the support and resistance. So basically, we've been following this. We made our top here at $64,000, and we've been making a series of lower highs here. And we were able to predict this price level here simply because if you take the Fibonacci retracement from the top here to the bottom down here, it brings us to the $52,000, $53,000 mark here. And in the last few videos, I've been giving you the various lines of support and resistance. And we can see that we've come across this resistance here, because if we take the Fibonacci retracement from this top to this bottom, look where it comes to. Once again, the affinity of Bitcoin to come back to the 61.8, and this is exactly where we're being rejected here and finding some resistance. And that's at the $48,000 mark here. The question is, where do we go from here now? But certainly, it would make sense that if we did go towards this trend line, that there will be a short correction at this level here, around the $50,000 mark here. And obviously at this previous peak that we've just had, at the $52,000, $53,000 mark, will be another natural resistant point. So these are the resistant points we can see just on the larger weekly time frame here. The next major resistance that we'll encounter will be at these peaks here, from these bodies of the candles to their peaks here. Anywhere around the $58,000, $59,000 mark. And obviously the final big resistance point will be the previous all-time high, which is going to be around the $64,000 mark. Just taking an overall view of what could happen in the next few days and weeks, we've got a resistance here at 50, then at 50 $3,000 here, then at $58,000, and at $64,000. Okay, we're now going to move on to our wisdom bite, which is a special wisdom bite with a very simple story, but with a very big message. And it's called The Farmer and His Son. And I'm going to give you an insight of the moral of this story, so we can all learn a very big lesson from this. This is the story of the Chinese farmer. Once upon a time, there was a Chinese farmer who had lost a horse. He had run away, and all the neighbors came around that evening and said, "Oh, that's too bad." And he said, maybe. The next day, the horse came back and brought 7 wild horses with it. And all the neighbors came around again and said, "Why, that's great, isn't it?" And he said, maybe. The next day, his son, who was attempting to tame one of the horses, was riding it and was thrown and broke his leg. And all the neighbors came around again in the evening and said, "Well, that's too bad, isn't it?" And the farmer said, maybe. The next day, the conscription officers came around looking for people for the army. They rejected his son because he had broken a leg. And all the neighbors came around that evening and said, "Isn't that wonderful?" And he said, maybe. You see, the whole process of nature is an integrated process of immense complexity. And it is really impossible to tell whether anything that happens in it is good or bad. Because you never know what will be the consequences of a misfortune, or you never know what will be the consequences of good fortune. So I hope you enjoyed that story. I certainly learned a lot from that when I first saw that story many, many years ago. And what I take away from that, firstly, that life is a process. And we should never get carried away when we are faced with any circumstances, either good or bad. Secondly, we should not get emotionally carried away with life's events, because they're not ends in themselves. But the wise farmer knows that nothing in life is as it seems, and therefore never gets drawn into the temporary illusion of these isolated events. And thirdly, we should realize that all events are interconnected with each other. And the wise farmer knows that there is no such thing as separate events, but that all events are interconnected, where often bad events are connected with great consequences and good events are connected to terrible consequences. And I want to bring this story back to Bitcoin and how it relates to Bitcoin, because if we make a lot of money with Bitcoin, and just imagine that, like a lot of people want to buy Lamborghinis and buy big things with their money, if, let's say, on one day you buy the Lamborghini, which is a good event, let's say, but next day you crash and injure yourself seriously, which then becomes a bad event, then we have to question, was making money with Bitcoin a good event or not? So there's some food for thought for you. Okay, so we'll leave it there. Thank you once again for watching. Very much appreciated. And if you found value in the technical analysis as well as the wisdom bite, then please do remember to like and subscribe and to turn on the notification bell. And if you want to leave any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.